Good day, traders. I want to talk about a concept that I call framing the market. This concept will help new traders understand where we are in the market. I'm going to start by going to the monthly chart, and I want to find the order block below the move, below price, and then find the order block above price. In this case, there's a bullish order block here below price. So I want to highlight that order block. I'm going to highlight it wick to wick. The red candle and the green candle combination is the order block. I highlight the order block. I want to do the same thing for the order block above price. All these are bearish order blocks, the little green candle and the big red candle. But this one is the immediate order block that's above price. So this is the order block that I want to highlight. Until price breaks above this order block or below this order block, your trade is contained in the white area. Once we have the order blocks highlighted on the monthly chart, we're going to drop down to the weekly chart. On the weekly chart, we want to do the same thing. In this case, the weekly order block above price is this one. It's contained within the monthly order block. So you go ahead and highlight it. You can use different colors if you want to. I'm not going to do that. You can label these if you want to. Again, I'm not going to do that, but it's nothing wrong with you if you do that, especially if this is your first time seeing this. Here is the weekly order block below price. Now we want to drop down to the daily, and we want to do the same thing with the daily. We'll call this the bullish order block below price. Again, I'm highlighting wicks. And now we need to find the bearish OB. It's not one present, not one that we use anyway. So again, the weekly is a stronger order block than the daily, so on and so forth. So we are still contained within this white area. There's actually a bearish order block that formed. We'll go ahead and use that because this tells us that price is going to push down. So that is your daily bearish order block. Now we'll drop to the 4-hour. We want to do the same thing on this 4-hour chart, right? And we don't see any order block on the 4-hour chart, but there's no bearish order block, at least on the 4-hour chart. There's a bullish order block right here. Okay, so if you're trading, you know your trade is going to come from here down to here without a problem. You'll get a reaction, right? It'll probably keep pushing down till it gets to this daily order block at least. What I would suggest for newer traders is to try to pick a trade setup that has little interference on the way down. Now, obviously, this trade is going to push up first to the imbalance, right? Then it's going to push down to fill this imbalance. But as a newer trader, the more clean area you have for your trade, the more smooth the trade will play out. It will be less back and forth, less reactions, less bouncing, more long momentum candles. This is what we call framing the market. This will also help you understand where you are as far as price action. Are you at the edge? This is the top of structure. If we squeeze this in, we are at the top of structure. We don't want to buy at the top of structure. We want to sell at the top of structure. We're going to sell it down to the bottom of structure. This entire leg from here to here is a move up with complex pullbacks, right? The move started here, it went up, gave us a high, gave us a higher low, higher high, higher low, so on and so forth. And the move continued till it got here. There's a higher high. Then we come down and we break these lows, right? When we break these lows, we know that price is going to push back down. Here's the last higher high. We pushed and broke this low, which is called chalk, a change of character. This lets you know that the structure has shifted from a bullish structure to perhaps a bearish structure. Once you understand that this leg is done, you can fib from the bottom to the top. And you want your pullback to come to the discounted rate. That discounted rate is start at the 50% all the way to the 78%. So if I delete my drawings and I understand that a 78% pullback is an optimal trade entry, and I understand that my imbalance is here, there's a pretty good chance that price is pulling back to my imbalance. So I can take a trade and sell it in order to buy it once it reaches this area. Once the sell trade comes down here, I'm going to take a buy back to the top. We know that this is a bullish market and it's a bullish structure because we broke these highs, right? We broke these highs. Now we need to pull back. Thank you for watching. And if you need more assistance, reach out.